Haddaz is the name of our company. It's coated cookies, which include high-quality cookies with a delectable texture that meet the tastes of our various customer segments. Haddaz has been making coated cookies, and the CEO of the company is Mr. Darwish, the owner of the company. Haddaz target their coated cookies will maintain and rise up the profitability of their business and satisfy their customer utilities. Our strategic management in the field can help to obtain the goals as well as preparing themselves to meet the challenges from the competitors in the market. As you can see from the chart, the company is led and managed by 6 skillful people allocated into 6 different departments, which are the CEO, it's Darwish, Seti is the public relations, Hodani is the marketing department, Aris is the head of administration manager, the Yan is the financial control manager, also Aisha is the manager of the operations manager. She's the head of the operations. Vision and mission of the company. So number 1 vision is our signature treat. Coated cookies is made fresh every day with only the finest ingredient, making it a delicious way to celebrate. Number 2 is and to operate with as many retailers as possible to make our products known and used by the people. Our mission is to bake the most delicious cookies ever. We use quality ingredients in every freshly baked treat and provide excellent customer service to ensure things that are not only tasty but also a pleasure to enjoy.
Our product. The picture shown is a sample of our product, which is coated cookies. Our coated cookies is extraordinary because of our modified recipe. The ingredients used to bake the cookies are exceptional high quality material. Meanwhile, the chocolate used for coating provides a luxurious and rich flavor for the customers. The combination between these two will provide a fully coated cookie that will offer the customer a sweet and crunchy taste that lingers in the mouth. The product characteristic. Our product approximately contains 40 pieces of cookies per bottle. Every piece of the cookies is fully coated. We bake our cookie into bite-sized cookies so it will be easier to eat. And we also use high-quality materials only. The most important thing here is our product is halal and Muslim friendly. For people with allergies, please be noticed that our product may contain wheat, chocolate, or cocoa.
We analyze our market through some parts. One of it is target market. We observe people's demand on cookies and dessert before we choose to produce this product. Next, barriers to entry. We have to make sure that other business cannot easily enter this cookies and dessert industry and at the same time be our competitors. Next, we analyze our market through competition. Other businesses' weaknesses can inspire us to improve our business operation. Other than that, some of our marketing strategies in this industry are company's logo, slogan, ensure customer satisfactions, website, free cookies samples, and discounts.
Future planning. We are planning to extend our business to Sarawak in next 2 years in order to raise our profit. The reasons for choosing Sarawak to our next goal is the largest state in Malaysia, GDP growth improved gradually, large population and low rent step by step. In the first year, we target to rent a factory in Sarawak, and it will be only for concession business in Selangor. We start hiring employees for Sarawak's business, selling and producing at the end of the first year. In the beginning of second year, we will enter Sarawak's large malls and supermarkets like Pakistan and Iambik. Smoothly commencement of business after 2 months. Operational plan. With our company now, new business products still unknown to many people, rely on capital from the owner. We got some short-term goals, which are extend market share, extend product line, and increase the number of employees and agents. We also get several steps to archives goal, strategic marketing our product, good PR collaboration with famous people, cultivating a positive and competitive business culture, and the next one is good recruitment.
The next part of the operational plan. So let's start with production. We will use large numbers of ovens and also baking appliances to mass produce these cookies. This is to ensure that there is sufficient supply of stock for the customers. And number two, for our inventory, we will put these cookies in an airtight jar and seal it with a tape to avoid them from being stale. We will also put it in areas with room temperature and use the FIFO, first in, first out method to ensure that this inventory won't be staying for too long before it gets spoiled. And then for our distribution, for nearby customers, we will offer delivery towards their houses, while for far and distant customers, we will cooperate with courier services like Post Laju and Ninja Van.
Sales budget, as you can see from the table, we calculated for the 12 months. So each quarter is contained 3 months. Quarter 1 we got 35,500, quarter 2 we got 50,500, and quarter 3 we got 65,000, quarter 4 is 80,000, and the total for the whole quarters, which is the 12 months, is 231,000. The expected cash collection for the whole year is 2,430,720. Production budget, and this is how we calculate each and every quarter, and the total is 231,800.
Our direct materials are flour, chocolate chips, and chocolate. So each direct material requires different grams per jar. So flour needs 90 grams per jar, chocolate chips needs 25 grams per jar, and chocolate needs 250 grams per jar. So material cost per gram for flour is Rm 0.0028 cent, and chocolate chips is Rm 0.02 cent, and chocolate is Rm 0.0069 cents. So the additional information is that materials on hand at the end of each month equal to 1% of its quarter production. So we make direct material budget for each direct material, which is for flour, for chocolate chips, and chocolate. So for flour, we divided the budget into first quarter, second quarter, third quarter, fourth quarter, and the total for a year. So we start with production times with materials per jar. We take the figure based on the flour materials required per jar, which is 90 grams per jar, and we proceed. We get production needs plus desired ending inventory. We got total needed minus beginning inventory. We got materials to be purchased in grams, and then we time with cost per gram in flour, for flour, which is Rm 0.0028 cent, and we got materials to be purchased in Rm for flour for each quarter and the total for a year. So that's for flour. So we proceed with the chocolate chips. The same formula is used, but the difference is materials per jar. We use for materials per jar for chocolate chips, which is 25 grams per jar, and cost per gram for chocolate chip, which is Rm 0.02 cent. Same goes to chocolate material, direct material budget, chocolate budget. We use the different materials per jar, which is 250 grams per jar, and we also use different cost per gram, which is Rm 0.0069 cents. So with that we got the total materials to be purchased. Next, I will proceed with expected cash disbursements for materials. So the additional information is that half purchases is paid in the month of purchase, the other half is paid in the following month, and no account payable balance from last year's fourth quarter since the business just started its operation. So we made the expected cash disbursement budget for each direct material for flour, chocolate chips, and chocolate. So we divided the budget for first quarter, second quarter, third quarter, fourth quarter, and the total for the year. And for the calculation for first, second, third, fourth quarters purchases, 50% times with the total material to be purchased in RM that we got from the previous direct materials budget. Same goes with the chocolate chips and chocolate expected cash disbursement budget. The difference is that from the total materials to be purchased figure. Then with that, we will get total cash disbursement for each chocolate chips and chocolates.
In our direct labor budget, some important informations needed are time required to make one product and wage rate per hour.
This is our manufacturing overhead budget. There are three main points in here. The first one is fixed manufacturing overhead is 15,000 ringgit for a year. The second one is the depreciation is 4% for a year. And the last one is the variable manufacturing overhead rate is 5 ringgit per direct labor hour.
For ending inventory finished goods budget, we first compute the product cost by calculating direct materials, direct labor and manufacturing overhead costs. Ending inventory for the year that we get from the production budget then be transferred here to calculate finished good ending inventory cost. We have our variable and fixed selling and administrative expense that are calculated with budgeted sales unit to get our cash disbursement for selling and administrative.
Let's proceed to the cash budget. At the end of the year, we will have a total of cash available of 2,465,720. After we minus our cash disbursement and also our financing part, such as the repayment of loan and interest, we will get an ending cash balance of 696,570. Then we proceed to our manufacturing statement. So the ending materials inventory, we will get 444,613, and then we add on direct labor and also our manufacturing overhead. We will get a total cost of goods manufactured of 1,208,963. And then lastly, for our income statement, we have a total sales of 272,772,000. After that, we will get a gross income of 1,567,909 after we less our cost of goods sold. And then we will get a profit before tax of 1,374,610, and after taxes and also our dividend, we will get a retained profit of 1,314,110.
The budget balance sheet shows that in this year our company got a respectable sales, which leads us to having RM 696,570 on cash account and 230,408 on account receivable. Allowance for debit account is 110,880 ringgit. We got worth RM to 92548 raw material inventory waiting to become delicious cookies, worth 4,872 ringgit finished goods inventory waiting for the owners who lack them. Machinery and equipment is worth 25,500. Therefore, our total assets are 1,360,770. For the liability and equity part, we got RM 46,660 capital, 1314110 ringgit return earnings and loss. We got 136,0770 ringgit for total liability and owner's equity.